Right, good afternoon, YouTube. Thank you, as always, for joining us. If you do like the content that we're putting out, you can get this every day. We are out live on our Zoom channels for members every morning from 10 to 8, and again at this time every day of the week, not just the Tuesday and Thursday you see us on YouTube. So yeah, if you do want to sign up for that, the details of how to do so are below this video in the description. So yeah, jump that way if you want more of this. Tuesdays are often a pretty good time to kind of get the week into full swing, but this is effectively kind of a Monday, so maybe not quite as aggressive a day as maybe we would normally get. Having said that, we have had some pretty good news over the weekend. So on a news weekend like this one, the debt ceiling seemingly being resolved, we're looking at seeing some, well, probably good to start in the US really. To begin with, having a look at what's happened in the indices, and that with the government yields, the 10-year yield is off a little bit this morning, as you would expect. Overlay the US dollar index onto this one, it will probably tell you a very similar story, seeing that very weak move in the dollar softening as a result of those yields falling, and stocks as a result have done pretty well. Or I say stocks, the S&P and the Nasdaq have done pretty well. The Dow was looking good until around 11:30, and then by 12 o'clock we had some big heavy selling coming through on the Dow. Been on call, so I'm not quite sure what happened here. But yeah, seeing some relative weakness under the hood of the Dow Jones versus its tech counterparts. Obviously, the Nasdaq and the S&P are being blitzed higher by the impressive moves that we've seen in Nvidia in recent weeks. Nvidia is now up to the third biggest component of the Nasdaq, probably the biggest of the S&P as well, I imagine. Not quite, just the fourth on the S&Ps, but yeah, still a pretty big chunk. Growing. I mean, I think all of that 40 tick move that we had last week in the S&Ps was all down to what happened with the Nvidia move. Nothing else moved. So yeah, 100% of that move was basically down to one stock moving. This is known as like breadth in the market, right? If you have, well, with the S&P, there's 500 companies. If they're all going up a little bit, then that tends to mean it's quite a healthy market, that things are, the whole index is moving up aggressively. Whereas when you get, and that's known as breadth, like a wide breadth of things moving in the same direction. When there isn't significant breadth, when you have a few markets, a few stocks moving the whole market, that tends to suggest that things tend to be coming towards a relative close in terms of overall bullish sentiment. If none of the other stocks are going with it, then that ends up being a bit of a drag on the market, and you can often see that things turn lower. And very much the trend, if you have a look at we've got the S&P on the daily chart here. We're up at highs for the year again, up to this high volume node from the middle of last year. Yeah, not too far off the point of control, but who knows, maybe we'll even get up towards this 4.3 level. The markets have been aggressively moving higher across the board. The S&P, the Nasdaq itself, even more so. I mean, we've been really getting going with this Nvidia story since we took that high out up from August of last year. Yeah, tech has very much bounced back. And as I've been saying, this is not echoed in the Dow Jones whatsoever. We're seeing relative weakness in the Dow. And again, we're seeing that today with that difference between the two. But yeah, the truth is this debt ceiling is looking like it's going to get put through. There are some, as I mentioned this morning, there are some concerns. Some of the more extreme sides of the Republican Party are suggesting they will not allow this to be voted through. Not happy with the final agreement that was put together by McCarthy and Biden's team, but it feels like on the whole this will get done. Seeing what the debt ceiling will be moved until 2025, keeping some costs completely flat was the kind of takeaway from the negotiation. But yeah, this will all be put through the House Rules Committee at 3 p.m. Eastern Time, which is 7 o'clock UK, or sorry, 8 o'clock British Summer Time. So yeah, we might. I mean, obviously that's going through. That's when they're meeting. It's not like a data release, so we're not expecting things to necessarily move on that at that time print. But perhaps there will be some more news out later, so things might be a little bit buoy. But you've got to expect, with the yields coming off a little bit, with the dollar softening, that there is an appetite for risk coming back into the markets. There was a fear, obviously, they'd run out of money by the 1st or 5th, depending on which of the Ellen's comments you want to follow, which would have been, put the US in their first ever default. So not something the markets you would have expected would have responded to particularly well. So yeah, very interested to see how they respond on today's open. What else have we got? We've kind of been through this morning, through the kind of week ahead, so I won't go through that with you again. There's plenty of data out this the first Friday of the month, and the week leading up to it always give plenty to get your teeth into. Today's not the biggest day. We had some nice moves on the Spanish CPI. 8 o'clock. I do like this figure. The fact that it's out bang on when the markets open as well creates a little bit more volatility. Bonds were probably the cleanest move, I'd say. We saw this nice move. If you look down here on the Bund, pretty aggressive move at 8 o'clock. Went down and grabbed some liquidity off that value area for the month, and has been sustaining that move higher. Bit of chop early doors for those of you who are watching this. We were down 60, up 60, down 60, up 60 within half an hour on the DAX. It was pretty choppy. Managed to get in a little bit of that value low on the weekly and trade that range for the day. So that was kind of my only trade so far this week. And I'm probably going to be saving myself for the consumer confidence figure come 3 o'clock. It's not the biggest figure in the world. And maybe if we do start to see some real strong appetite for buying on the open, I might jump in ahead of time. But hoping that, we see some big volatility out of consumer confidence might be a little bit optimistic. It's not always the biggest figure, certainly compared to what else we've got coming out this week. I don't think it will move things as much as others. But what we've seen in terms of moves in these markets, gold has been one that's been incredibly strong. The move on the PCEs, we had that initial drop in the first 5 minutes, about $7, $8, got to lows of about 14s. Similar story with the GDP and the GDP price index. On Thursday, more so, we had an even bigger fall on Thursday on gold, on the back of that over $20. So gold is certainly one I would look at. And if you have a look at the differences, we mentioned the differences between trading the NASDAQ and the Dow at the moment. If you want to be long stocks, NASDAQ seems to be the place to be. If you want to be short stocks, the Dow is the one. And there's kind of an interesting story with the currencies, right? I probably wouldn't be trading gold, or I wouldn't be trading the dollar at the moment when gold is giving you such exaggerated volatility. You see this decline that we've had in the dollar index today, from the highs down to the lows there. We're looking at 0.6% of a move on that market. If you look at gold from this high volume node all the way up here, you're looking at over 1.5% move. So, you're looking at nearly 3 times the volatility in gold at the minute. So that's certainly one I will be looking to trade, evidenced by move today, moves on data last week. It's still performing incredibly well on this. As traders, we're looking for volatility. We're looking for markets that are volatile. We're looking for things that are going to move a long way, and gold is giving us all of those things at the moment. So it's something that I'm definitely banging the drum off. You've probably heard me talk about this a little bit in recent times, but it continues and persists at the moment. So what else have we got for you? Not you don't have anything on the option data at the moment. That comes through at past, but as soon as I get that, we'll jump on and take a look. But looking forward, for those of you who are trading overnight, we've got Lowe speaking from the Reserve Bank of Australia, and then we've got Aussie CPI out at 2:30. The German prelim, I should probably talk to you about this because this is all going to happen, or a chunk of it's going to happen before the open, or before the Zoom that we normally do at 10 to 8 tomorrow morning. We've got the Westphalia data coming out. If I show you tomorrow, the German data does start to come through from 6:30. So we've got North Rhine-Westphalia data, 6:30. That's the first region. At, where are we? 9 o'clock, we get a bunch of regions: Baden-Württemberg, Bavaria, Brandenburg, and Hesse. Strangely, North Rhine CPI month on month in May. Anyway, I think that's a little bit of confusion. And then we get some further data from Saxony at 10 o'clock. So the fact that we are getting this data out by 6:30, this tends to kind of get the ball rolling on the trade for the German CPI. And then we get the actual headline CPI figure out from the whole of Germany, with a harmonized component all out at 1 o'clock as well. But that's all going to be out before our next Zoom. So do bear that in mind. It could be a good day to be trading early. And there was plenty later on in the day. These jolts have been moving markets, certainly gold. I think the stocks had about 16 or 7 or 18 consecutive down bars after the jolts last time. We don't see moves like that very often. So this is one to keep an eye on as well. So let's take a look at the markets as we lead into the open, seeing that kind of discrepancy between the two. This is the short Dow, long NASDAQ trade going to persist? Is Nvidia going to continue to be the darling of the stock market? We shall see. But we're seeing some pretty muted open in the first 10-15 seconds, not seeing a great deal whatsoever to report on this early. As I bring you the options. So we're seeing, yeah, well, this is interesting. It's quite a unusual day where you've got a lot of calls higher, a lot of puts lower. Looking at where the S&P or the SPX currently trading at 24s. We're kind of in the middle of here, right? We're around this sort of level, so we could either. It wouldn't be a surprise to see both of these levels tagged today, depending on how much appetite the bulls are going to have. But I'd certainly be looking up to this 40s, 45 level if we get aggressive on the open. And if we do manage to see some selling, then there's a long way down. Actually, it's that 80, 41.85, 41.80. There's a lot of puts in there, so that could be very interesting. But we're curious to see how that plays out throughout the day. So the view is, I mean, this should be bullish, right? Yields have been off, although they have turned of late. So you would have expected a nice start to the stock market, but as of yet, yeah, Dow's up just over 10 ticks. The S&P, yeah, a couple of points there. And where are we on the Dow? Yeah, not even 20. So pretty quiet out there, pretty eerie for what's been quite an aggressive weekend, news-wise at least. So yeah, I'll leave it with you then. There's not too much happening here. I will be back on Thursday morning, but yeah, we'll get you back with Neil come 10 to 8 in the morning. And as I say, if you haven't already signed up with us, you can do through the details below. So trade smart, consumer confidence in a little under half an hour.